Imagine you wake up tomorrow, open your banking app, and realize that while the numbers are still there, their purchasing power has shifted drastically. For anyone living in the United States, the idea of the dollar losing its spot as the world's reserve currency isn't just a distant geopolitical debate. It is something that directly hits the price of your coffee, your mortgage rate, and the future of your retirement. For nearly a century, you have lived in a country with what economists call an exorbitant privilege. This means that while the rest of the world has to produce real goods like cars, grain, and oil to get dollars, your country can simply print those dollars to pay the bills. This system has allowed the American standard of living to stay artificially high for decades. But what happens when the rest of the world decides it no longer wants to accept that paper in exchange for real work and resources? The consequences are deep and will change your life in ways you might never have imagined.
The first major pillar supporting your lifestyle is the fact that the dollar is the standard currency for global trade, especially for oil. This is what keeps the demand for the dollar consistently high. Think about it. If a country in Europe wants to buy energy from the Middle East, it needs dollars. If a manufacturer in Japan wants to sell to Brazil, they usually get paid in dollars. This forces every country to keep massive stockpiles of American currency in their vaults. The moment countries like China, Saudi Arabia, and the BRICS bloc start trading in their own currencies, that need vanishes. When global demand drops and those dollars start coming home, you face what is known as imported inflation. Everything you buy at Walmart or Amazon that comes from abroad becomes much more expensive overnight. If the currency you use loses value on the world stage, your domestic purchasing power is the first thing to be sacrificed.
You have likely noticed that the U.S. national debt has surpassed $34 trillion and continues to climb every second. As long as the dollar is the reserve currency, the government can keep issuing debt securities, which are basically promises to pay, and the world will keep buying those promises because it needs dollars for trade. But if the world stops buying that debt, the American government will have a mathematical problem that is impossible to solve. Without foreign buyers for treasury bonds, interest rates in the United States would have to skyrocket to attract new investors. This means the interest rate on your credit card, your car loan, and your mortgage could jump from 6% or 7% to 15% or 20%. The dream of home ownership would become a financial nightmare for the middle class, and basic living costs would consume almost all of your income.
Another direct consequence is the end of the government's ability to fund public services and defense without causing an economic collapse. Today, the American government spends more on interest payments for its own debt than on its entire defense budget. If the dollar loses its reserve status, the United States loses the ability to export its inflation. Currently, when the Federal Reserve prints money, the impact is diluted globally because the whole world uses the dollar. If the dollar is used only within American borders, every new bill printed directly devalues the bill in your pocket. You would see prices at the grocery store change weekly or even daily, as happens in countries facing currency crises. The financial security you take for granted today depends entirely on the world continuing to trust the value of your currency. The loss of geopolitical power also affects your safety. For decades, the United States used the dollar as a foreign policy tool through financial sanctions. If a country didn't follow the rules, it was cut off from the dollar system. However, this tactic actually accelerated the end of the currency's dominance. Countries around the world, fearing they might be the next targets, began creating alternative payment systems. The moment the dollar is no longer the only option, sanctions lose their bite. This means the American government will have fewer tools to influence the world without resorting to direct military conflict, which is far more expensive and risky. For you, this could mean a more unstable world and a national government with fewer resources to protect American interests abroad, which ultimately impacts the domestic economy through broken supply chains and trade uncertainty.
You also need to consider your retirement and your investments. Most retirement plans in the United States, such as your 401k, are based on American assets, like stocks and bonds. If the dollar weakens, the real value of these assets decreases in global terms. Even if the number in your account goes up, what you can actually buy with it may go down. The American stock market has been the favorite destination for global money because it is considered safe. If that safety disappears, foreign capital flees to other markets or into real assets like gold. This would cause a prolonged decline in domestic financial markets, reducing the accumulated wealth of millions of workers who count on these investments for their old age. The comfort of the retirement you planned for could be severely diminished.
The social consequences of a sharp currency devaluation cannot be ignored. History shows that when the currency of a major power loses its value, social inequality increases drastically. Those who own real assets, such as land, real estate, or precious metals, manage to protect themselves. But those who live on a fixed salary or have their savings only in paper money see their lives destroyed by inflation. You would see an erosion of the American middle class, with more people struggling to cover basic needs like healthcare and education. Social tension tends to grow when the social contract, the promise that if you work hard you will have a good life, is broken by the loss of the value of money. The stability of American society depends on a stable currency. Without it, internal divisions tend to deepen. The technology and innovation sector, which is the pride of the United States, would also suffer. Currently, the country attracts the best talent in the world because it pays the highest salaries in the strongest currency. If the dollar becomes just another common currency, the incentive for that talent to migrate to the United States decreases. Other global hubs in Asia or Europe would begin to compete on equal footing. This would reduce American technological leadership, which in the long run means fewer high-paying jobs and less economic growth. You would see the infrastructure and innovation that made the country a superpower begin to stagnate, affecting general quality of life and the competitiveness of American companies on the global stage. To understand the logic of this process, one only needs to look at history. No reserve currency has lasted forever. The Roman denarius, the Spanish real, the Dutch guilder, and the British pound sterling all had their periods of glory, and all fell due to overspending, wars, and unsustainable debt. The United States is following the same historical pattern. The danger is that having lived your whole life under the dominance of the dollar, you may believe that the rules of economics do not apply to your country. But the math is heartless. If you consume more than you produce and finance that gap with debt, the bill eventually comes due. De-dollarization is the world presenting that bill to the United States.
The conclusion is obvious, though painful. The end of the dollar's global dominance means that the American standard of living will have to adjust to the reality of its real economic production. You will have to learn to live in a world where the United States is just another player, not the owner of the board. This requires you to rethink your personal financial strategy now. Trust in the system is no longer enough. You need to seek to understand real value,
Protect your wealth with assets that do not rely solely on the government's printing press, and be prepared for a scenario of persistent inflation and high interest rates. The era of easy money and infinite credit is coming to an end, and the cost of this transition will be felt by everyone, from the small investor to the largest corporation on Wall Street. Stay alert to the facts. The increased use of central bank digital currencies around the world and the expansion of economic blocs that exclude the United States are clear signs. Financial security in the future will not come from betting that everything will stay the same as it has always been. It will come from your ability to adapt to a new reality where the American dollar has to compete with other forces. Your future depends on you taking action today, seeking information, and protecting what you have built before the change becomes a finalized reality on your bank statement. History is being written in financial terminals and at international negotiating tables, and your wallet is the battlefield of this new economic reality. Beyond this immediate loss of purchasing power, you have to look at what sustains the physical security of the United States, the defense budget. Currently, the country maintains over 800 military bases around the globe. This firepower isn't just maintained through taxes, it is funded by the nearly infinite ability to issue debt that the rest of the world is forced to buy. If the dollar stops being the reserve currency, the cost of maintaining the most powerful military in history becomes unsustainable. For the average citizen, this means the government would have to choose between funding healthcare and schools or maintaining its military presence abroad. Without the dominance of the dollar, the United States loses the ability to project force without breaking its own economy in a few short years. This creates a more dangerous world, where the power vacuum left by an American withdrawal would be filled by powers that do not necessarily share the same values of freedom and democracy you hold dear. The end of the dollar is, in practice, the end of Pax Americana, the period of relative global peace guaranteed by U.S. hegemony since 1945. Another point nobody tells you about is the eurodollar market. This is a parallel banking system that exists outside U.S. borders, where trillions of dollars are traded and stored. The moment the world loses confidence in the currency, these trillions of phantom dollars start flooding back into the U.S. domestic market. Imagine a giant reservoir that suddenly bursts and all that water rushes into a single city. That is what would happen to the domestic economy. A massive surge of dollars returning home, causing the value of every bill in your wallet to disappear at a terrifying speed. What you know as inflation today would look like child's play compared to a devaluation caused by a massive return of foreign-held currency. You would see the price of basic goods like milk and eggs double or triple in months, while your salary remains stagnant. This is the reality for countries that lose control over their currency, and the United States is not immune to this physical law of economics. You also need to understand the paradox of American industry. For decades, having a strong currency was a double-edged sword. On one hand, it allowed you to buy cheap imported products. On the other, it made American factories less competitive, as products made in the United States were too expensive for the rest of the world. If the dollar falls, the country could, in theory, become an industrial powerhouse again, as its products would become cheaper for export. But there is a serious problem. The United States spent decades gutting its industrial base and sending jobs to Asia. Rebuilding those factories takes time, costs billions, and requires a skilled workforce that the country stopped training. During this long transition period, which could take a decade or two, you would face the worst of both worlds: incredibly expensive imports and a chronic shortage of domestically made products. It would be a period of scarcity and rationing that the American public has never experienced in peacetime.
The issue of the petro-yuan and energy is another direct hit to your pocket. When the dollar is no longer the only currency accepted to buy oil, the United States loses its ability to control global energy flow. If Saudi Arabia or the United Arab Emirates decide they would rather be paid in digital currencies or gold, the American government loses the leverage it has used to keep energy prices stable for the domestic consumer. You would see the cost to heat your home in the winter and to drive to work rise permanently. Cheap energy was the fuel that allowed the growth of cities and the suburban lifestyle in the United States. Without it, the very model of American life, with large homes and long commutes, becomes financially unfeasible for most people. A social redesign would be forced by a cost crisis that would change the face of American cities.
Looking at history, the closest example is what happened to the United Kingdom and the British pound after World War II. The pound was once the world's currency, backed by the vast British Empire. When that empire crumbled and debt became too large, the pound lost its throne to the dollar. The result for the British was decades of economic decline, loss of global relevance, and a painful adjustment in the population's standard of living. The United States is now at the top of that same roller coaster, looking down. The difference is that today's global economy is much more integrated and faster. What took decades to happen to the UK could happen in a few years to the United States. The digital financial system allows trillions of dollars to change hands in milliseconds. The moment the global herd of investors decides to change direction, there will be nothing the Federal Reserve can do to stop them. You would be watching the fall of a giant in real time on your smartphone screen.
The loss of talent is another silent consequence. The American dream has always been the United States' greatest export. It attracted the brightest scientists, engineers, and entrepreneurs from every nation because it offered stability and wealth in a solid currency. If the dollar loses that shine, the incentive for the world's best minds to move to the United States disappears. Instead, you could start seeing a brain drain from within the country itself. Skilled Americans might seek opportunities in new financial capitals in Asia or Europe, where money is more stable and growth is real. This would weaken America's ability to innovate, which is what keeps the country ahead in technology and medicine. Without innovation, economic growth dies, and without growth, the debt becomes even heavier. It is a vicious cycle that feeds on itself.
You also need to consider the psychological and social impact. The American identity is deeply tied to the idea of being number one. When that perception is shattered by an economic crisis caused by a falling currency, social cohesion is put to the test. Historically, periods of great monetary instability lead to a rise in populism and extreme political divisions. People look for someone to blame when their purchasing power vanishes. This could lead to drastic legislative changes, tax hikes on the middle class to try to save the government, and a climate of uncertainty that discourages private investment. The trust between the citizen and the institutions, which is already shaken, could break entirely. A nation divided internally has much less strength to face an external crisis of this magnitude. The balance that keeps the United States functioning depends on a sense of shared prosperity that only a stable dollar can provide.
The security of daily transactions would also be affected.
The American banking system is the heart of world finance. If the dollar fails, the clearing system that allows you to use your debit card anywhere could face interruptions. During a reserve currency transition, banks could face liquidity crises, meaning they don't have enough cash on hand to meet withdrawals. You would see withdrawal limits and strict control over the flow of capital. The government might be forced to rushedly launch a central bank digital currency, a CBDC, to try to stabilize the situation, which would bring immense concerns about your privacy and financial freedom. Every penny you spend could be monitored and controlled by the government in an attempt to contain inflation, and the security of daily transactions would also be affected. The American banking system is the heart of world finance. If the dollar fails, the clearing system that allows you to use your debit card anywhere could face interruptions. During a reserve currency transition, banks could face liquidity crises, meaning they don't have enough cash on hand to meet withdrawals. You would see withdrawal limits and strict control over the flow of capital. The government might be forced to rushedly launch a central bank digital currency, a CBDC, to try to stabilize the situation, which would bring immense concerns about your privacy and financial freedom. Every penny you spend could be monitored and controlled by the government in an attempt to contain inflation and market panic. Logical reasoning leads us to an inevitable conclusion. The privilege of issuing the world's currency is not a divine right. It is a contract of trust based on productivity and fiscal responsibility. The United States has been violating this contract for decades, printing money to fund wars, unsustainable social programs, and bank bailouts. The end of the dollar is simply the market applying the laws of economics that never stopped existing. For you, this means that safety is no longer in the system, but in your individual ability to prepare. You must diversify your wealth, look for real assets that hold value regardless of what the government does, and reduce your reliance on credit. The world is changing the rules of the game, and if you don't adapt, you will be the one paying the bill for this historical transition. The future will not be easy, but those who understand reality have a chance to survive and even thrive in a new landscape. The American dollar may survive as a regional currency, but its time as the measure of all things is ending. Watch for signs of new trade agreements that exclude the West. Keep an eye on the price of gold and energy, and above all, protect your knowledge and your ability to produce value. At the end of the day, the only thing nobody can take from you is your skill and your vision. History is in motion, and the United States is at the center of one of the greatest economic adjustments of all time. The end of one era is the beginning of another, and your role in it depends on the decisions you make today, while the dollar still has the value the world is beginning to question.